Now we move our attention onto another element, ladies and gentlemen, and this time really celebrating the participation of international delegates who are present with us here today to share their thoughts, share their insight, and of course their experience about what we hope to see across the African real estate market in comparison to what is taking place from a global point of view. Our next speaker, ladies and gentlemen, is the CEO of the European Public Real Estate Association, EPRA, Dominique Mourenhout, who will be delivering a keynote address on African real estate within the European and global context. Please warmly welcome Mr. Dominique Mourenhout.
So, ladies and gentlemen, good morning. First of all, before to run through the slides, etc., I would like to thank API for giving EPRA the top priority and the top opportunity to be present here and to give a little bit an outlook about what is our view about the European listed real estate success story over the last years and how Africa could benefit from that going forward. I think we had nice panels yesterday, top presentation just done now by Tom. Of course, I heard since I joined here South Africa 2 days ago that the market has been under pressure over the last years, etc. People have the feeling that there is a huge capital outflow going from Africa and South Africa to other parts of the world. I will also try to be very positive in my speech here, and also based on our experience in Europe and also the evolution we see on capital markets and the evolution from investors that you will see through my presentation, that I'm a strong believer that what is happening in other parts of the world will definitely benefit Africa going forward. Having said that, so I will structure my presentation in 3 parts. The first part, I would like to give you a broad overview of the global and European listed real estate sector, just to put everything into perspective. And after that, I will move a little bit more about what we call the European listed real estate success story, and what has been the role of we at EPRA, so the European Public Real Estate Association, in this fantastic evolution over the last 20 years. But what is even more important for me here is to try to identify the few aspects which, to my opinion, might have a very positive impact for Africa as well going forward. And last but not least, also some trends and growth opportunities which we see in Europe, and which to some extent, for certain of those parameters, will definitely have a positive influence on the African listed real estate market. But let's start first by having a broad overview. When we speak about the listed real estate sector in the world, what are we talking about? You probably know that we at EPRA, we are managing together with FTSE and NAREIT, which is our sister association in the US, the FTSE EPRA NAREIT Index Stories. So when you look at listed real estate globally today, so we talk about more or less 3.2 trillion of euros of a total market cap. What is interesting to see there is that the largest part in the world is definitely the United States of America, and I will come back to that a bit later. Most of the listed real estate sector in the US is structured by REITs. The emerging markets to which Africa and South Africa are belonging to represent more or less 30%, and compared to the US, you have a very limited portion which are REITs. South Africa is totally different, because South Africa, when you look at the total market cap today in South Africa, it's around 90 to 92% of the market cap, which is structured via REIT vehicles. Moving now to Europe. So if I look at one of, I would say, our flagship indexes, which is the FTSE EPRA NAREIT Developed Europe Index, which is a very fair representation of what's happening in Europe. So what do we see? First of all, the 2 largest countries in Europe are, and I think Tom briefly alluded to it earlier today, are definitely the UK and Germany. The UK has always been the leading country on the listed real estate sector in Europe, but it has been bypassed by Germany starting in the first quarter of 2018, but it did finish last quarter. Germany used to be, during the last 18 months, the largest real estate sector, and it is mainly thanks to the very strong uptake of large residential company listed in Germany. You probably know that the largest listed residential company in the world is not an American company, is a European company based in Germany. The figures which you see here, you see France seems to be a little bit little, but we should integrate the numbers from France and Netherlands together, just because Unibail-Rodamco-Westfield, which used to be the largest market cap in Europe, is considered for the management of our index as a Dutch company because it's listed in Amsterdam and not listed in France. So we should more or less integrate 95% of the market cap from the Netherlands to France to really give a fair representation of what France is today. Interestingly, we have one Nordic country which is the fourth largest market cap in Europe, Sweden, and Sweden is, according to us, a very nice success story. Many listed real estate companies on the market, a very diversified portfolio. But if we look at the three largest economies, France, the UK, and Germany, they do represent more or less 2/3 of the total market cap we have in Europe. Looking at the numbers by sectors, so all the companies which are eligible for our index are classified based on a sector. So what we see today when we look at the Developed Europe index, the diversified companies represent 31% of the total market cap, which is followed by the residential sector accounting for 24%. If we now start looking at the underlying assets of those companies, because like here in South Africa, you have a lot of diversified companies. If we start looking down at the single assets in their portfolio, the retail sector still represents the largest part of our index, more or less 30%, followed by office 27% and residential represent 23% of that. What is more interesting, and I will come back to that a bit later this morning, and Tom also already alluded a little bit to that already, is the uptake and the growth of the alternative sectors. Today, the alternatives in Europe are representing roughly 10 to 11% of the total market cap, but we are still very, very small compared to the US. If you look at the US listed real estate market, the alternatives represent above 40% of the total market cap. So again, also a nice area of growth, not only for Europe, but also for Africa. We hear also more and more companies being active in this domain. So we have seen a certain uptake over the last years, but definitely this area will drive huge potential going forward. Looking at Europe, if today somebody says, okay, I want to invest in Europe, if I want to mirror the Developed Europe Index, which we are managing, investors would be investing in more or less 106 companies, representing over 12,000 of commercial real estate assets. And I exclude from this number the residential units, because otherwise we could multiply this number by 65 or 70 due to the residential units. And you would be investing in 20 different countries, and all the sectors are, of course, represented into that. So a very strong market, but which still has a lot of growth opportunities. Now moving on to more what we see and what has been the success story over the last 20 years. In Europe, we have the advantage, like you have here in South Africa, is that there is an association managing and developing this sector. As you see, the mission we have as an association, so we have 20 people on the payroll, is really to, I would say, to develop, to promote, and to represent the sector. So we are really there, I would say, as a driving force, working together with, on the one side, the property companies, but also working a lot with investors, and you will see that as part of our membership, really to drive and to motivate the sector going forward. So the association was created back in 1999. We did celebrate our 20th anniversary in September this year. And when EPRA was launched in 1999, it's a bit the same story which you had while creating the SA REIT here in South Africa. The EPRA's founding fathers' vision were twofold. First of all, they wanted to establish a solid and internationally recognized index. And secondly, which is also something which the SA REIT here is tackling, is the need to streamline all the reporting and accounting methodologies, which were totally different from the one company to the other. Very difficult for investors to compare the performance of a company compared to another company. So those were, I would say, the first two elements which really, I would say, trigger the creation of the association and give, I would say, the first items to be tackled. And of course, the listed real estate sector in Europe, and I think this is something interesting for you here in Africa, is that the sector has been evolving over the years together with EPRA, so we helped really to boost the sector, and we had, of course, different milestones. This is not, okay. We had different milestones also in the growth, which I would say did constitute, I would say, the four big building blocks of the sector going forward. So I mentioned our founding fathers' vision, first of all, was to create an index. So the index was launched immediately after the creation of the association, launched in the year 2000. In 2007, 7 years later, the total market cap of this index was already 11 billion of market cap and reached over 200 billion of market cap back in 2016. We are far more advanced today, but I will come back to that in a minute. Second important thing was to set up best practice recommendations for the sector, and EPRA did start immediately with that by developing financial best practice recommendations. What was the main objective of that? First of all, is to oblige and to force companies to be entirely transparent about their financial performance, but also, and more importantly, and this is something which I think Europe has been more advanced also to the US, and it's also something which can be, to my opinion, easily duplicated here in Africa, is the fact that it allows investors to compare companies on a like-for-like basis. So EPRA started developing its financial best practice recommendation in 2001, and in 2011, but I will elaborate a bit more on that later on this morning, is everything concerning sustainability. Sustainability, you know, is an important subject, increasing in importance. If there is one area, I would say, where Europe is more advanced compared to the US, is definitely I would say, the need to establish ESG and sustainability criteria. Third important milestone in the EPRA evolution is it's nice to have a benchmark, it's very nice to have best practice recommendations, but we have to be involved in the political and decision-making and the public debate. Why is that important? Because we are all facing with multiple strategies and regulations in the countries. I would say Africa and Europe is more or less the same. When I speak about Europe, what I have to say when I speak to investors, we are not the United States of Europe. You have the United States of America, but we don't have the United States of Europe, and we don't have the United States of Africa. But even if we not, I would say, one single country, one single tax regime, one single legal regime, we succeeded in developing a very strong framework, taking into account the specificities of the different countries. And if, ladies and gentlemen, between you and me, if Europe has been able to manage that, I'm quite sure and very positive about the fact that Africa can definitely duplicate that going forward. But of course, being involved in this public and political debate has been really key, and that's the reason why EPRA used to be based in Amsterdam. This is where the association was created. We decided to move the office from Amsterdam to Brussels to be sitting, and we're also physically sitting at 300 meters from the European Commission, just to be very close, I would say, to all the people from the parliament, etc., to be sure that we can influence the legislation at the right time. Of course, so index, best practice recommendations, we also have the obligation, and I would say the need to be involved in this political debate. But what is important is the contact with the investors. At the end, it's nice to have nice reporting framework, to have the right regulations, etc. But what is more important is to be very, very close to the final investors. So that's also one of the reasons why we have created what I call satellite offices. We've got an office also in London, we've got an office in Hong Kong, and from those offices, together with the office in Brussels, we are talking on a daily basis with all the big investors in the world, be them specialist investors or generous investors, but I will come back to that. So we have developed that step by step. but we have 4 big pillars. And today, when we look, for example, at our membership, you can see that we have all the stakeholders in the sector which are part of our association. So more or less, roughly, 60% of our members are the listed real estate companies, be them structured as REITs or non-REITs. We have 25% of our membership, which are the investors. So all the big ones, going from the Cohen & Steers, the Fidelities, the BlackRock, the Blackstone, so everybody, I would say, is a member. And we've got a small portion of a membership, which are more the universities, with whom we are collaborating on the research reports, etc. So based on that, I would say our European experience has, I would say, really demonstrated that the market evolution and its boost will definitely be linked with the evolution of the regulatory environment. And if you see here, and I will not go into all the details about, okay, how has the market evolved over the last year. So the first country in Europe which did introduce its REIT regime was the Netherlands back in the late 60s. But what is more interesting to see is that the creation of the REIT regimes in the largest countries, such as France, the UK, Germany, and Italy, they launched their REIT regime quite recently. So most of those countries launched their REIT regime between the year 2003 and 2007, so just before the global financial crisis. And even in that context, they became, I would say, very successful in only a few years. Let's say the example of Germany, which put in place its REIT regime back in 2006. It used to be a 6 billion market cap in Germany. Today it's a 66 billion market cap. So it has been multiplied by then, just because people could see that, I would say, the introduction of those regimes, etc., are very, very powerful. What are we seeing today on the markets? I already mentioned the growth of alternative. This is definitely clear, but this is definitely an area which we can further boost going forward. We also saw more and more companies issuing debts, especially in a very low interest rate environment. This is important. A lot of companies are issuing debt. We also have the phenomenon of companies issuing green bonds. Again, I do the link with sustainability and ESG. We also saw some concentration, so M&A activities. Can give you an example. Unibail-Rodamco took over Westfield. We also have, I would say, some companies talking to each other. And also, interestingly, you know that you also have some of the South African REITs, which also are increasing their stake in some European companies. So the market growth for us has been very expensive over the last year, and of course had an impact on the evolution of our index. If I look at the market cap of our index back in 2010, the total market cap was 112 billion euros. But what was interesting there is to see that mainly office and retail were the components of those index. Above 80% were covering those two sectors. If I look at the total market cap at the end of 2018, it's 286 billion euros. But office and retail are only representing 60% of the index today. So what have been the two forces behind that? First of all, the growth of the resi sector in Europe, and Germany is definitely, I would say, leading the game, followed a little bit by Sweden. And the German resi success story is, to my opinion, I would say, a driving force for developing more listed real estate companies, focusing on the residential sector in the years to come. The biggest countries have to do that. We have too many funds which are on the private side. I'm quite sure that in the coming years, a lot of countries will take the benefit from the German history and the German success story to really put on the market very large and diversified portfolio. If I speak about Vonovia, for example, so the largest market cap in Europe, so those guys are managing today around 600,000 residential units. So you can imagine the size of those markets. They have the capacity to manage it, and also the economy of scales to bring that to the market. So, of course, here, so founding fathers said, okay, we want to have a solid internationally recognized benchmark. This has been done. And if we now move more to the best practice recommendations. As I said at the beginning, so when the listed real estate sector started, many ways of reporting. It was very difficult for investors to compare company A with company B. And EPRA really did set up this financial reporting framework with, I would say, on the one side, with the incentive to motivate companies to be entirely transparent about their financial performance, but more importantly, as I already said, is to allow investors to compare companies on a like-for-like basis. And what we are doing, so we have, I would say, this whole financial best practice recommendations in place, sustainability, and I will give you a bit more, some examples here. And also every year we give awards to the companies because it is something it has to be recognized. And this is something today I can speak to you very openly about it, ladies and gentlemen, is when you speak to investors today, and not only in Europe, because you know that we have a huge inflow of Asian money, but also more importantly, US money in Europe, I can tell you that the largest investors today, the first thing they look at the company is whether they are following the rules and using the EPRA best practice recommendations. For all the big specialist investors, if a company doesn't report them, they even don't start looking at the company. So this is something which was, I would say, not really organized 20 years ago, which has been organized, has become, I would say, it's a must-have for the companies today. It has really helped also to attract capital. And again, if Europe did it, I'm quite sure that Africa can do it. And I know South Africa REIT here, the SA REIT has been publishing now the second version of its best practice recommendations. We are also happy to help there. But I would say we are not the United States of Europe, you're not the United States of Africa. But I would say the only advice I would give her is put in place those concepts. Try to, maybe you have to commercialize them, I would say to have them become really the benchmark for investors, and it will definitely, I would say, motivate investors to be closer and closer to the African market. If I look at our financial BPR, just to show you the traction we had over the last year, so as I said, it's really a prerequisite today. So what this year, we've been assessing 175 listed real estate companies, which are EPRA members. Also, for some of them, are part of our index. And they all represent, I would say, the bulk of the market. So what have we seen this year is that we have 71% of the companies which have achieved an award. So we have different level of awards. It's not because you report them that we don't look at the numbers, etc. So 71% of the companies got an award, which represent roughly 87% of the European market cap. So you can imagine that it has really become the benchmark. What is interesting to see is that the number of gold awards has doubled over the last 5 years. So which really, again, proves that companies really want to be at the top because they do recognize that having this framework in place is key to attract capital. Moving to sustainability. I was really pleased to hear talking yesterday about sustainability. Sustainability or ESG is more or less the same. I was really pleased to hear talking about that yesterday because this is something which is becoming more and more important. Prior to joining EPRA 2.5 years ago, I spent 15 years on the private real estate sector, managing very large pan-European real estate portfolios. And I can tell you that based on that, what I have seen over the last year, 6-7 years ago, when I was confronted with large due diligences performed by the top specialist investors, pension funds, insurance companies, etc., you always had in the due diligence checklist what I call the questions number 25 and 26, saying, do you have a risk management policy in place? Yes, no. Do you have a sustainability policy in place? Yes, no. This has changed. Today, those questions are not the question 25 and 26 anymore, but they are the questions 3 and 4, and you have to explain in 25 pages what you've been doing exactly in this domain, what is your strategy, and how successful you are in these criteria. So ESG, sustainability, is definitely something which is on the rise. I was really surprised that, for example, the ESG take-up in the US was not really present a few years ago. Today, the US is also getting traction there. Asia, exactly the same. If I compare when we meet with investors in the US 5 years ago, I would say maybe during 10% of the meetings, somebody raised a question about ESG or sustainability. Today is during 70% of the meetings. In Asia, 3 years ago, no questions about ESG. Today, 35% of the meetings, we get questions from investors in Asia about sustainability. So this is definitely ladies and gentlemen, it's also something, I would say, a little advice or maybe a little roadmap I would give to Africa. This is something you definitely have to consider, and I was pleased to hear yesterday that this subject is coming more and more to the table here in Africa as well. But if you want to attract all the big investors, this is definitely an area which you have to be developing in the coming years. So what we've done with our ESG or sustainability best practice recommendations, so we developed them in 2 phases. The first phase was in 2011, where we created, I would say, the backbone for sustainability reporting, but only focusing on environmental criteria, because this is what everybody was talking about carbon emission, carbon footprint, etc. But we realized with the evolution going more from sustainability to ESG that the S and the G part were becoming more important. So we have issued in 2017 our first guidelines and our first BPRs, if I can call them like that, because I think that's a word you like to use here in South Africa as well. So we issued the first KPIs for the S and the G part also in 2017, of course focusing more on the social aspects, and I will come back because I think that's important in the future, and also on governance. And companies, again, like for the financial BPR, so they are assessed every year. So what have we done this year, for example? So we've been assessing 158 companies in Europe, representing 71% of the total market cap. And I would say 71% of the total market cap in Europe really received an award. And we only have 5% of the European companies not reporting anything on ESG, only 5%. So this is a very clear signal, and I speak on a daily basis to all the REIT CEOs in Europe, etc. ESG, like many other topics, is really one of the top 3 or top 4 priorities. Also, when you look at those companies, they are communicating a lot about it. This is definitely something that is on the rise. So we talked about the index, we talked about, okay, having this right of framework in place, the involvement in the political debate. Looking at the world today, you probably know that, but we have 42 REIT regimes in the world. 14 of those 42 are Europeans, and 3 African REIT regimes. So also in Europe, so we had the new REIT regime at the beginning of the year, so Portugal is now on the map as well. We also are in talks with several countries to develop their REIT regime. And of course, I would like to illustrate, I would say with an example, the impact of an efficient REIT regime for the boost of the market. And I would like to use Spain for that. What did happen in Spain? Spain put in place its first REIT regime in 2009. This REIT regime didn't really attract the companies. What was the reason for that? It's just because this REIT regime was not responding to the investors' prerequisite. It was not a very investor-oriented REIT regime. So one company came to the market. What did happen between 2009 and 2013? A lot of lobbying with the state of Spain, with the Ministry of Finance, etc., saying, guys, we don't have the right REIT regime in space here. If we want to attract investor capital from everywhere in the world, we need to have something which is investor-oriented and also in line with the successful REIT regimes everywhere in Europe. So the state said, okay, we change the REIT regime, came into force in the second half of 2013. You see here on the graph what has happened during the first semester of 2014. In only 6 months, the market cap of the Spanish market was multiplied by 10. So again, having, I would say, this right REIT regime in place makes sense, delivers value, attracts investor, and Spain is not a large country. Also from a real estate point of view, it's a nice country, but it's not the largest one. So those experiences here, and also my message I would like to give to my African friends here is, if we did it, if you have the feeling that in your country that the REIT regime which you have in place is not the one which will help you to attract investors, do not hesitate to be involved in the political and the public debate, because this is where you make the difference. And I can give you a few examples of domains in which we've been quite active and where I would say our involvement in this political and public debate really made a difference on the market. Without going into all the details, a small thing, Solvency II. Solvency II is I would say I wouldn't be very short on that because the legislation sometimes is a bit boring. Solvency II was created just after the global financial crisis and did put in place, I would say, a framework for the insurance companies for all the investments they do in any single asset class. The problem we had for the listed real estate sector is that the insurance companies were, the listed real estate sector was considered as an investment in equity, which is not, and I will come back to that in a later phase. So they were considered as equity, and equity under the Solvency II legislation was in the upper bucket for capital requirements. So if I take an insurance company, I invest 100 in, I would say, in a REIT, I have to put in my capital 39 on the side. But if I'm investing in a private real estate fund or in direct real estate investment, it was only 25%. So the listed real estate sector was really, really penalized about it, and there was no single rationale behind it. In my previous job, I was on the private side. I was really pleased to have Solvency II on the other side of the table because it did allow us very easily to attract capital from insurance companies because the capital requirements were set at 25% against 39% for the listed. Coming to the listed sector, I say to the guys, this is one of the key topics we will have to tackle in the coming years because they will have to change the legislation. So we started working, I would say, with the European Commission at this level. And I can tell you that after more than 2 years, I would say, of lobbying, of providing with the numbers, knocking at the right door, etc., we've been quite successful because since the 8th of June this year, the capital requirements for all the investments done by the insurance companies into the listed real estate sector have been reduced from 39% to 22%. So we are even lower than for the private real estate sector. And that was a key improvement for us. And this is also an area where Africa will benefit from, is the fact that today, when you look at the European landscape, the insurance company sector is 3 times bigger than the pension fund industry. In the US, totally different story. The pension fund industry is much larger than insurance company. So here, we have the insurance company represent today around 12 trillions of assets under management. When you look at their tactical asset allocation today to the listed real estate sector, it does represent more or less a few basis points. So you can imagine when you are quite influential on the political debate, if you can influence them to change the legislation, assume insurance companies on the 12 trillions of assets under management, if they were to swap, I would say even 5 or 10 basis points from any single asset class to the listed real estate sector, we can easily double the size of the market. So again, my message to you here, I say, we were able to do that here, but you have also here in Africa to give you the means to be very active and involved in this domain. Because if you say, no, but those are the rules, this is the legislation, okay, we have to take that into account, we have to deal with it. No, please, 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 please be involved into that. We also influence on the pension fund, but I will not enter into all the details. So today, the pension fund industry is also incentivized, I would say, to go much more for long-term investment in the real economy with sustainable and long-term economic benefits. Sustainable finance is also an area where we are quite active, etc. So you see being involved, I would say, at the African level for you would make sense, but also in parallel to that, you have to be active at your local level. As I mentioned here, so the REIT regimes, we've also been working, so Portugal was a success this year. 2 interesting countries in Europe which do not have a REIT regime today are Poland and Sweden. And this is also interesting when you enter into this discussion to see, I would say, the influence you can have, but also sometimes, I would say, some disappointments you may have with the political domain. I take the example for Poland. I remember when we started talking with Poland, initially they wanted to have a REIT regime in place which would be only applicable to the commercial real estate sector. 2 years after, they made a 180-degree shift, and they would say, no, okay, we are happy to launch a REIT regime, but we want it to be applied and applicable only to the residential sector. So you see, sometimes it's not always easy, I would say, to control the political game behind it. Sweden, also very interesting. So we have a REIT regime, I would say, ready on paper, but there is an ongoing tax revolution in Sweden. And this is also something where we are confronted with that on a very regular basis, that a lot of states think that if you want to speak about the REIT regime, everybody's got the feeling that the main objective of that is to reduce the tax. And of course, the states say, no, we don't want to have this regime in place because we want to keep at least the same level of taxes. I can tell you, we can prove you that putting in place the right REIT regime even delivers more taxes for the state. So again here, so you see, sometimes we get things done quite easily, sometimes it's a little bit more complicated, but I think you have to give it a chance. And also sometimes we have to come with, I would say, pragmatic solutions to the environment. I told you that one of our pillars was really what I call attracting investors in the sector. And then they put in place this stupid legislation about MiFID II, which has put in place, I would say, a revolution in the way listed real estate companies and investors talk to each other. So they used to be in contact through their investment bankers, through their stockbroker, etc. This landscape has changed. So we, as a neutral platform, this is also something that your associations could do here in Asia, with the fact that we are a neutral platform, so we are not affected by this legislation. And we have been organizing, since the launch of this regulation, a lot of events where we bring around the table investors and companies. So the success story, to make a long story short, so it took us, I would say, some years to do that, but I think we've been quite successful. And a lot of those items here, if we've been doing that in Europe, if it has been successful, there is no reason for Africa not to be able to do that. Of course, we were not alone to do that, so we are part of a larger network, so we work a lot with all the leading associations in the world tackling the listed real estate sector, NAREIT in the US, ARES in Japan, APRIA covering the whole region, RealPAC from Canada, Property Council of Australia, and we are also hosting a big conference next year. It's the first time where we'll be inviting, I would say, all the big associations from the world, and of course, SA REIT and SAPOA will definitely be our guest. Maybe quickly, because I only have a few minutes left, about some trends and growth perspective. First of all, the trends, I think everybody talked about it. Retail is transforming. This is very clear. Today, when we look at the European market, the retail has really been suffering. But again, when you see today the discount to net asset value from the sector, to my opinion, this is totally unjustified. So there is an overreaction from investors who are still comparing the US with Europe, comparing the US with Africa, etc. This is completely wrong. I also, since I arrived here, I had the opportunity to speak to a lot of companies, a lot of REITs, etc. And I've got the feeling that the retail sector in Africa is quite comparable to the European one, but it's not, we are not the United States of America. The United States of America are really suffering. The retail is suffering. When you look at the GLA per capita, it's 5 times higher in the US compared to Europe. If you look at the GLA for the department store, which is really the area which is suffering for the time being, department stores in the US represent 43% of the gross letting area. In Europe, it's below 8%. Everybody speaks about, okay, the evolution of e-commerce. Yes, it is a reality. The US is at around 25% penetration rate. Europe is 11 to 12%, so we are not the United States of America. And alternatives already spoke about it, but there is still room to grow, and I think it's the same here for Africa. Alternatives will definitely be on the rise. PropTech and innovation, I don't have time to go to that. I think we can all agree here that the PropTech is definitely a disruptor for the market in the way we are using building, the way we are developing buildings. Tom also referred to the flex space, to the co-working. Yes, indeed, it is a new trend. If you look in London, for example, during the first semester of this year, the huge take-up in London is linked to flex space. So this is also very interesting to see. What is for me very important and a very important topic which we will have to tackle in the coming years is the problematic around the last mile delivery, which combines together the way retailers and logistic companies will work together. Okay, very quickly here, in terms of growth perspective, and I want also to mention that for Africa. I like to compare the US and Europe. When you look, for example, at the market cap in the US, you saw it on the previous slide, 99% of the market cap is structured via REITs. It's only 56% in Europe, and here in South Africa is also around 90%. What is more important is the pension fund asset allocation to the listed real estate sector. That is very important, and there you see a massive, massive difference. In the United States of America, when I speak to the pension fund, be them on the DB schemes, DC schemes, etc., they have between 12 to 14% of their asset allocation listed real estate sector. In Europe, it's between 1 to 5.5%. I think in South Africa here, it's a little bit higher. But again, ladies and gentlemen, we are talking on a daily basis to the pension fund industry. And of course, we have more and more pension funds increasing their asset allocation to the sector. And most of the time, as Tom mentioned already this morning, they go for global mandates. So Africa and South Africa are definitely part of it. So the work we are doing here, and I can tell you when I saw the big uptake of the investment done by the Dutch and the UK pension fund industry in Europe, it will happen in Africa as well. So they are increasing the assets, and Africa will definitely benefit from that. The investor perception is also evolving. I had too many times discussions with investors saying, yeah, if I invest in a REIT, I'm investing in equity. No. If you want to speak about a REIT, you have to speak to the equity team. Sometimes also you have to speak to the bond team. No. We want to speak to the guys who are managing the investments in real estate. That's also one of the reasons why we also commission sometimes a research paper. We did a very interesting one with MSCI back in 2017, which really demonstrated that the performance of the REITs mirrors the performance of the underlying assets after only 18 months. So again, investing in a listed real estate company is definitely an investment in real estate. The global classification, and I'm almost finished, just 2 more minutes, is the global, I would say, industry reclassification. You probably know that all the big asset managers in the world, they are using either the GICS classification or the ICB reclassification. The real estate sector, and particularly the listed real estate sector, used to be part of the financials. Today it's not the case anymore. So both classifications have now created a specific and standalone asset class for the real estate, combining the allocation for listed and unlisted. It's another proof that the listed real estate investment is definitely an investment in real estate. Last but not least, for me, is the importance of the generalist investors. Specialist investors, we all know them. When you speak to them about their asset allocation, be it strategic or tactical asset allocation, they are already, I would say, more or less at the top of their capacity. So today we have to attract the generalist investors. What are they? Smaller pension funds, insurance companies, asset managers, private banks, family offices, etc. So we are working quite a lot with them. And of course, all those type of investors take global mandates. And of course, when they take a global mandate, it also benefits Africa from being there. Also interesting to see, I'm regularly in Asia. It's also interesting to see the increased attractiveness from Asian investors for the listed real estate sector. They used to be 100% invested in private real estate. Today, also, some of the biggest insurance companies and asset managers in Korea and Singapore, Hong Kong, and Tokyo, they have now started establishing their own teams investing in the listed real estate sector. Contribution to society, I will not go for that through, because we don't have the time. Maybe just some key takeaways. So I think you understood that for me, the listed sector, I would say, is really a transformative force for the countries. You need to have those big REITs. You need to have those big listed real estate companies with this very long-term vision, this long-term capacity to be there. Everybody speaks about urbanization in the world, but urbanization is not something which you can develop. In fact, you can't provide the answer to urbanization in 5 or 6 years. So having a private funding with that is not the case. The listed sector and your REITs will help you doing that. It offers jobs, of course, more jobs, far less taxes. And of course, what is important for me is to make sure that your REIT regimes which you have in place definitely have to be investor-oriented. I think for you, the managers in the room here, you probably saw 20 years of experience in Europe. We didn't build it in one day. As I always like to say, we are in the real estate sector, so I'll never be able to build a building in one day. So it's the same here. Also, if you want to develop the market, there's still a long way to go. I like to compare Europe with the US. Africa, for me, is exactly the same situation. But the potential is there. When you see the evolution also of the big investors, the pension fund industry, the insurance companies, all of them, they go for global mandates. I would say convincing them to develop and to invest more and more into the listed real estate sector will definitely help Africa to boost. And again, I like to say that if we've been successful in Europe, I think there is no single reason for Africa not to be able to duplicate the system. I thank you very much for your attention.